Hi guys, welcome back. So another company got attacked today. It was Ebang International Holdings. I saw that I got quite a few questions from my Discord asking me what I think about this, and because I did not get into this company before, I got into SOS but got out of it 2 weeks ago. So today I want to look into the short report and tell you what I think about this, whether this is a scam or a great buying opportunity, okay? But before I begin, let's look at the market first. Today, all the index were slightly down. They opened up high at first, and then Dow Jones was consolidating because it had been reaching all-time high for a while, and I do think it needs to rest for a while, at least a few days. And same thing with the S&P 500. They both had a strong breakthrough yesterday, and I think they need to have a little bit of consolidation above the gap within the next following days. So while they're resting, we might be able to put more attention on Nasdaq. Nasdaq was the only one that closed with the green bar today, even though this doesn't look good at all, leaving a long hammer line. But I think it's mainly because it's at this gap down since February, where we had the beginning of the big correction, and there were simply a lot of shares trapped at the top. So it would be a lot of selling pressure to digest at this moment. So that's why it's somewhat expected to have a hammer line like this. But at least the good news is that it did not close below the opening price. Because in the morning when it gapped up above, I said to the Discord, if it closed or dropped below 13,670, maybe we should trim some position to leave some cash. But we saw that it suddenly dropped quite a bit in the afternoon and also before the closing at the lowest point of 13,677. So it's still holding through. So I think right now, after a very strong breakout of this downward trend for quite a few days already, the best case scenario would be for it to consolidate and rest a little bit above one of the two gap up, so it can come back to backtest this support of 13,600, or at most backtesting this support at 13,400. It can use some time to consolidate before breaking through and reach higher top, because it's a lot of selling pressure to digest at this moment. Because after this run up, we have a lot of supports at this moment. Even if these two supports are broken, we still have the downward trend line to act as another support. So at least right now we are more at ease to not so much expect another leg down like a lot of people speculated back in 2 weeks ago. Yesterday I also said in the Discord that I find it strange and not safe to see all the index running up strong, and the VIX was also up 3% yesterday. So I said if this continued today, I would have to open a short position to hedge against my portfolio. But today we saw the index were down and the VIX were up slightly. So it's back to normal where I would expect it to behave. And I do think it's much more work and mind consuming to open short position than long position. And it requires fast in and out trading and much more risk, because at least if you are trapped with your long position, you can just wait. Eventually it would come back up and you can break even. Given the fundamentals of the company, it's good enough, right? The Hong Kong index was still closed yesterday, so we can look at the Shanghai Composite Index instead. So it opened high and continued the downtrend at some point, looking like a long red bar, but in the end it closed recovering a lot of the dip to be only dropping 0.04%. So it's still looking like it's on an uptrend, but experiencing some consolidation. Okay, so different than yesterday, where the index were all up and most of the stocks and our portfolio were down. And a lot of people ask me the questions, why is the market up so much, so strong, but my portfolio is down? And it's normal because we need to wait for the market to be stabilized first before the capital would flow out of the mega cap partly and pull up the smaller caps. So that's why today we see a lot of our Chinese stocks had a great run up. We can see simply by the PGJ ETF, the Golden Dragon China Power Shares. It's up 3% today, not bad. So let's go over our stocks. In the morning, we saw a lot of lower lows for the individual stocks, but then recover quite fast after a few minutes. For many of our stocks, we saw a V-shaped recovery in the first half an hour. Baby Neo grew 1.7% today after a run up for a few days already. It had a need of backtesting the support of 38 and then bounced back up right away. So we saw today's lowest point was 38.4. Right now, the resistance level is still the 20-day moving average, which is around 41, and then the 30-day moving average around 42. So between 41 to 42 would be the resistance level. But the good sign is we already see this 2 moving average turning the angle upward from here on. So after passing it through, we would have this 2 moving average serving as a support later on. If we can successfully stand above that within a few days, given the market is more stabilized. EH had a great run up of 8%. Yesterday, it was giving a lot of people stress when it suddenly dropped 2 days from the high of 39 to the low of 33. So yesterday in the Discord, I said that the next support is not too far away to be 32.2. And I also drew this triangle and said that we are almost at the end, near breaking out. And today we did see a breakout. Hope this is not a false breakout. For now, it is at the resistance level of 37.6. And this is from this day when it was dropping from 39 to 35. It was a big fall with large volume, making a lot of shares trap at the top. That's why we would have this as a resistance level now. And today we saw it reaching close to this level at 37.9 and then got rejected to come back down. For now, it would be normal for the share price to backtest the trend line as a support before the next movement. Okay? LKCO is once again moving precisely between the moving average. Today it was moving in between the 60-day moving average and the 5-day moving average, which was 1.21 and 1.27. So we see the lowest of today was 1.20 and the highest was 1.28. It was quite a precise movement within a tiny range. And I have said it several times in the past that it has been doing it for quite a few days in the past, as if someone was setting a lot of automatic order based on the support and resistance. It was dropping slightly to be 0.8% decrease, while every day the volume has been lower and lower. So we know that in these few weeks, especially the last 1 to 2 weeks, the market had been very volatile. A lot of up and down, a lot of dropping, a lot of big dips of stocks, and a lot of buying the dip, a lot of rebounding. And for retail investor, it would be normal for them to sell out a stock that has very little movement and go buy the dip of something else that has a big drop to grab the rebound. It's normal for retail investors. So for the share price to not drop a lot recently, we can think about what is the reason behind it. Who bought the shares that retail investors sold recently? It was the similar market psychology I used back then for Luckin Coffee when I decided to double down my position in November and December, because back then we saw a lot of the EV stocks, big and small companies, flying in the sky. So a lot of people would sell the stocks that's not moving in their portfolio. So for Luckin Coffee to remain flat for a while just tells me that someone is buying the shares that retail investors cut to change to the flying stocks, right? But then also it later on gave a false breakthrough of the support before bouncing back up strong. So very, very challenging for one's patience. And very easy to doubt your own decisions and constantly asking yourself whether you did the wrong thing. That is the market psychology I used back then. And I think this is similar happening to LKCO. So we'll see. for now, the next support is at 1 to 1.1. So there's still 10 to 20% distance in between. But once we have further news, we know that it could be very volatile. Again, we don't know how long the cooling off period could be. It might be when we have further news about Xiaomi and the hearing of LKCO. So yesterday in the morning, I said for YSG, the next support is 11.3, and I see that right now we are moving out of this long time downtrend. I see it breaking out and backtesting currently. So I said the next support is 11.3, and that would be a good time to buy the dip. And I drew a sketch here to explain. And yesterday we saw that it later hit the lowest of 11.3 and bounced back up. And today in the morning, while a lot of our stocks were diving and it created quite some panic effect, but it also got supported around 11.2 and did a V-shaped recovery, and it had been climbing up since then. So in this morning today, I said again that I thought yesterday's assumption was valid. It got supported again by the support, and I see it rebounding from here. So next target would be the next resistance around 13.8, and it's similar with ZEP. Also breaking out the downtrend and backtesting the support yesterday. And today we can see that the support is valid also by backtesting the downward trend line. For TAL, when I bought the dip on last Friday at 49.8, I said that my first target is 59, and it had reached my first target already, so I had trimmed half of my position, and my second target would be in the range of 65 to 69, so that's when I would trim again to take profit, because I'm already happy with the profit in such a short time. And also for iQIYI, I bought the dip on the same day at 15 something. My first target is around 19.6. This is when I would take profit for half of my shares. And for now, I would put a stop profit limit at 18.4 for half of my shares. So I at least lock up some profit in case the market goes downwards again, so I can keep some cash. Now let's talk about Ebang International Holding, ticker symbol EBON. So there was a short seller report from the Hindenburg Research. Title was Ebang, yet another crypto China hustle, absconding with US investor cash. It was published today during the pre-market, and we saw that right away the share price of Ebang had suddenly dropped dramatically after 8:30 from the previous close of 6.2, 6.3 all the way down to 4 point something. So it had dropped at most 20% during the pre-market. So this short report accused that the fund raised by the Ebang since June 2020, the IPO, to be $374 million had been used for some sketchy business. For example, they used to purchase the bond from the company named AMTD, which had a track record of fraud, and a similar company had done it before called Molecular Data. The share price has been down 70% since then, and 6 board members and co-founder resigned, and the auditor declined to stand for re-election. And the money is also used to pay back the loan from the relative of the chairman. And then before going to public on NASDAQ, last year in 2020, Ebang actually twice applied for a listing in the Hong Kong Stock Exchange and got declined because of a sales inflation scheme with a company called Yindou. And this company was a P2P online loan platform and had caused 20,000 retail investors in 2018 to lose a total of $655 million. So the prosecutors have been pursuing a criminal case against other suspects associated with Yindou, which is Ebang in this case. And Ebang claimed to be the leading Bitcoin mining machine producer, and yet they provide no evidence, and their final miners' sales had been declined to near zero, delivering only 6,000 total miners. And then it's since they announced the cryptocurrency exchange Then they have raised the market cap of $922 million, and they claim this to be a storytelling. So what do I think about this? First of all their claims, if they are true, it would make the company look very, very sketchy. And because Ebang is not one of my stock picks earlier, and I did no research in this company, so today I took quite a while to dig into this company, about what they do and their background, and all the claims from the Hindenburg research to see if they are true or not. While a lot of the information can be only cleared out by the company itself, I can only give out my own opinion based on what I can see, what I can find. And the rest we would need to rely on the company to wake up in the Eastern time and give out clear answer through the investor relationship or the PR. So let's go over it one by one. The company has raised $334 million in the last 4 sharings since it's gone public in June 2020. And for me personally, I actually see this as very good news, to be honest, because this is the shares bought by institutional investors, not by retail investors. And for them to do 4 sharings to raise funds within a short period of time, and they are always subscribed, it shows a vote of confidence to begin with for us retail investors, because it just tells that the institutions were willing to invest in them after they have done the research needed to begin with, and to know that they have sufficient cash in hand to be at least $374 million compared to their market cap of around $1 billion right now after the fall. It actually sounds like a deal for a company in a rising industry that's so much heated at the moment right now. It's not overblown up, and the cash balance is healthy, at least after all the share offering. And it shows that institutional investors do want to invest in them after their own research on the company. And I'm sure they dig into the background and history. And for them to purchase the bond of this company, AMTD, is something that we would need the company to give out official answer for that. Because sometimes I know the Chinese companies, they might have relationship with each other, they might help each other out, or they have some business going on that use bond to close the deal. I'm not quite sure. Only the company can answer this. And then after one of the share offer, they use the money to pay back the loan of a chairman's relative. And my response to this is, isn't it normal to use the money you have raised to pay back the loan previously? So why is it a big deal to point it out as a short report? Or is it just because the loan is from the chairman's relative? Then it suddenly becomes a problem. Because in the Chinese culture it's more normal. Because when the company is in debt or need cash urgently, it's quite hard to raise funds, especially during the bad weather. So I guess it's somewhat understandable to get a loan from your environment because it's where you have the most trust. They might have tried to get a loan first with institutions, but probably back then they didn't have the attention they needed. Like NEO for the end of 2019 or the beginning of 2020. They were also in a desperate position to get a loan. So I guess when a company is desperate, you kind of have to reach for any source for the loan. And again, this would need the company's PR to explain why specifically this person. But I find it a weaker argument here to point out this loan is from this person. And then next was to claim that Ebang got rejected for the listing application from the Hong Kong Stock Exchange. And the reason was because of being involved in a sales inflation scheme with a company called Indou. For this, I have taken into Chinese site to find out whether it's true or not. So in this article, it says that it did got rejected from the Hong Kong stock market to be listed. But the reason was not mainly because of what they said, but instead it says that the main reason was because the business of miner does not adapt to the Hong Kong Stock Exchange. And At the same time, Ebang International was not the only one who got rejected. There were also the other players in the same sector, which is Bitmain and Canaan Inc. Ticker symbol CAN. I think a lot of people know this company already. Ticker symbol CAN. It is also one of the recent popular stocks for cryptocurrency or blockchain technology. So Ebang was not the only one that got rejected from the IPO back then. Can was also in the same situation. So at the same time, both of these companies were rejected. So it was not because of the lawsuit involving. So both companies were sharing the same situation back then. So we can see the primary reason for it to get rejected was not because of the lawsuit with Yindou, but the fact that the short report had used this rejection from the Hong Kong IPO and accused it's because of this inflation scheme would be misleading in the first place. And it just tells me that this is somewhat false and misleading accuse. And also, the article I found was just on the internet. So basically, everyone knew about this before. It is not new information that's just revealed by the short seller. They did not just find out for this. And I can be quite sure for those institutions to subscribe to the new share offering from Ebang International 4 times in a row in a short period of time for a total of 374 million. I think they would have dig into this information that it's free to share on the internet. I think they would have known earlier already. So the fact that the Hindenburg research just used this old information, old news, as a misleading accuse just shows me how they are trying everything to manipulate the market to drive fear of retail investors. And here it says that the miners' business had gone to near zero. I have dig into this. It's true their sales were down by 70% in 2020 compared to 2019 for the sales of the miners. But for them to use the word near zero, it's again trying to create as much panic as possible by exaggerating it and hiding the fact that their business were a lot driven by the situation of the cryptocurrency. And we know that, first of all, the price of Bitcoin did not rise so much until the second half of 2020. And also, it's because of the miner business going down, they decided to change their business model and develop the cryptocurrency exchange. And it's because of this announcement that have added their value as much as 900 million market cap. While we know they're not the only one who announced this, because a lot of people also saw the opportunity and the huge potential of the cryptocurrency exchange. Right now we are seeing a lot of new IPO, a lot of blockchain technology company doing this as well. And basically, almost every single one of them had increased the market cap by 10x, 20x recently. So they're not the only one whose market cap got blown up so much because of the recent heat of the blockchain technology and Bitcoin, right? So if this accuse is right, then it's the same thing for all the other companies like Mara, MicroStrategy, like Can, for example, which had a run up from $4 a few months ago to be as high as almost 40. And Mara, ticker symbol MARA, had gone from as low as 35 cents to as high as $57. That's more than 100x. And then MicroStrategy, MSTR, from as low as $90 last year to as high as 1,315. Once they have announced to be a platform of cryptocurrency. Every one of them had a big boom. And to involve cryptocurrency exchange, there were examples like Square. It had a great support of the run-up because it announced to support exchange of Bitcoin as well as PayPal. And the recent IPO that's coming up, for example, SoFi and Coinbase, every one of them are taking the win of the recent popularity of Bitcoin, the recent explosion of Bitcoin. So that's why I don't think Ebang is the only one that announced cryptocurrency exchange and got the market cap blown up by a lot. We see tons of other examples in the same industry. So does that mean they're all scam that could be shorted like this? And for them to come up with a conclusion to say Ebang is another cautionary tale for inexperienced retail investors. And it's so common with other ridiculous China-based schemes. This is once again taking advantage of the fear of the Chinese companies to be fraud and scams again, which was exactly my argument, which was the other player in the crypto sector, similar as Ebang and Can, and also a Chinese company. And it was done by the same short seller, the Hindenburg Research. So this is the SOS. If we look at the chart, it was on this day, February 26. The short seller report had driven the price down by 21%. So this was SOS. It was February 26 on this day when it was shorted by the same short seller coming up with the short selling report, giving out a lot of false accuse. And I said in the video that I think recently we are seeing a pattern of a lot of short sellers putting their eyes on Chinese companies because it's just so easy. It's forming a pattern and it always works. Because after what happened with Luckin Coffee, a lot of people were quite fearful about Chinese companies being not transparent or being a scam because it's far away in China, it's nowhere within reach at this moment. Like Yihang, back then there's no way for us to go check out their factory for real at this moment. It is not something around us where we can physically see and touch. And because it's Chinese, so it's extra easy to just give out an easy short seller report and drive down the price by 20 to 50%. And they can take great profit from this. As we can see, they started to build their short position at the top. And once they publish the short selling report, they can cover their short position. And this is when the share price can bottom and bounce back up because there were so many false claims in the report. And they know that once the company wake up from the east and start to give out response to the short seller report and start to prove them with arguments, then all the fear selling would start to regret and people would start to think rational again. So that's why we see the bottom of the share price on that day, and then it rebound quite strong after. And later on, we have traded this stock a few times and took profit from it because it was just under attack by irrational and negative sentiments or fear. So it dropped from the high of 11 recently. I think a lot of retail investors might have already bought the dip here from 9 to 10, and then it dropped more to 6 to 7. And then went sideways to consolidate, and now it's dropped even further, making the price look much more attractive than 2 weeks ago. So if the company can clear out some uncertainties, this does seem like a nice deal to grab because you're basically buying the dip of a lot of shares that's trapped at the top. Now that's it for what I want to share with you today. Now if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.